Welcome to the Daily Decision Service. The goals of this presentation are to introduce you to the manager of the Daily Decision and the Daily Decision Service itself. We'd also like to explain how the Daily Decision Service works and how to make the most of the service. But first, let's spend a quick second introducing our website. Stateofthemarkets.com is designed to help you, the individual investor, be more successful in the stock market. We provide must-read market-moving headlines, market commentary, stock market research, market models, stock analysis, and most importantly, actionable portfolios with live trade alerts, such as the Daily Decision. So let's get to it. First, let's talk about the manager. Please allow me to introduce myself. My name is David Moenning. I'm the founder and chief investment strategist at stateofthemarkets.com. I'm the lead manager of the Daily Decision. I've been in the investment business for quite some time, started in 1980, and I've been a professional money manager since 1987. I founded Heritage Capital Management, which is a Chicago-based money management firm, in 1989, but I am not a journalist. I do not have a TV show, and I'm not a media star. No, my focus is on managing the stock market. I live in Evergreen, Colorado with my wife of 32 years. So, what is the Daily Decision Service? In short, it is an active risk management system which is updated daily, hence the name, designed to keep you on the right side of the market's important trends both up and down. The Daily Decision is State's flagship subscription service. It's designed to be your first read or your first decision of the day. Another way to look at it is that the Daily Decision is your risk management exposure decision of the day. We utilize easy-to-use ETFs. We hold just one position at a time, and it only requires about 5 minutes a day. The primary goal is to get the big moves of the stock market right. You see, each year there are 3 to 4 key trends that really make the year. Our goal is to get the majority of these trends right. We won't get them all right, but we want to get the majority of them and be on the right side of the trend. Here's an example in 2009. 2009 was both a painful year and a very exciting year to the upside. Market started off with a decline of 25% from January through the beginning of March. And as you can see, the red indicates when we were out of the market or short the market, and the green indicates when we were long the S&P 500. So by taking a look at this graph, you can see that we got the majority of the move right during the beginning of the year. It wasn't perfect, and again, don't expect this to be perfect because we definitely won't be. But we did miss out on the majority of this big decline. Then as the market rebounded, as the banks, became clear that the banks were not going to implode, we got the majority of the up move. We then took a pause, got the majority of the next big up move. Things got sloppy during the fall, as they usually do. Then we captured the vast majority of the year-end rally. Again, the goal is to get the big moves right, but it's very important to recognize that we will not be in the market every up day and out or short the market on every down day. We are money managers and not magicians. What do subscribers receive with the Daily Decision Service? Well, they get trade alerts. Every time we make a move, we send a trade alert via email before we ever make the move. You'll also get the Daily Decision Morning Report, which includes the decision for the day, the current positions, the market outlook, our new member rating, which tells people if they're not in the current trade, what we would do that very day. It gives you the environment model readings, our recent moves, and our performance. And yes, we update performance each and every day. You'll also get the Daily State of the Markets Report, which is my diary of the stock market, designed to indicate the overall drivers of the stock market at any given time. Finally, you'll receive 24/7 access to the Daily Decision Service homepage. You'll get current positions, the new member ratings, performance, trading histories, yes, where we show each and every trade we've ever made. You get the new user guide and the model portfolio explanations. We get a lot of questions with this service, but perhaps the biggest one is, it's called the Daily Decision. Does this mean we will make a trade every day? In a word, no. The decision each day refers to where our accounts will be positioned for that day. Remember, our goal is to manage the risk of the stock market and to capture the important trends in the overall market. We are not day traders. On average, our system makes between 15 and 20 moves a year, sometimes more, sometimes less. We will not be in the market every day it's up or out of the market every day it's down. Remember, we're money managers and not magicians. There are 3 Daily Decision model portfolios to choose from. There's a main model, an aggressive model, and a hybrid model. All 3 are included in the service. It's your choice as to which model portfolio you'd like to follow. The goal here is to allow our subscribers to find a risk tolerance level that's most appropriate for them. So let's look at these three models. The main model employs a long, short, neutral approach depending on the system signal. This means that we'll either be long the stock market, effectively short the market via inverse ETFs, or in cash, or a neutral position. We use S&P 500 ETFs, either long or short, meaning the SPDR or the SH, and we do not ever use leverage in the main model. The aggressive model, on the other hand, utilizes a long, short, neutral approach as well, but does so in a much more aggressive fashion. The key here is we'll use 2x or 3x leverage long or short ETFs, such as the SSO, the UPROS, or the SDS. The hybrid model, as you might suspect, is somewhere in between. It also takes a long, short, neutral approach, or will be long, short, or in cash, but the use of leveraged ETFs is determined by the readings of our models. In other words, sometimes we'll be long, sometimes we leverage long, sometimes we leverage short. Here's how the system works. Each day you receive the daily decision report before the market opens. It'll give you today's decision, the current positions, our market outlook, new member rating, and of course the performance of the service. Then whenever we make a move, we send a trade alert via email before the move is made. It will detail exactly what and how much we're buying or selling. Let's talk a moment about how we make the decision. We've developed a disciplined, unemotional risk management system that's able to adapt to changing market environments. While no system is perfect, and let me repeat that, no system is perfect. History shows that implementing a disciplined, adaptable system will help us get most market environments right and help us avoid big portfolio-killing mistakes. The daily decision starts with our market environment model. It's designed to tell us what exactly the overall environment in the stock market is at the current time, but you can think of it as a stoplight. The model incorporates literally hundreds of component models and indicators, and is designed to tell us when risk factors for the markets are high, low, or uncertain. So in sum, the model tells us whether the current environment favors the bulls, the bears, or neither team. So when the environment model gives us a green light, it indicates that the odds favor the bulls. Thus, the daily decision will be long the U.S. stock market via S&P 500 index ETFs, such as the SPDR, SSO, or UPRO. When the environment model flashes a yellow light, it indicates the environment is uncertain, or what I call iffy. In these iffy market environments, we'll keep things simple and attempt to stay simply in tune with the U.S. stock market following our short-term trend-following system. And then when the environment model gives us a red light, it indicates that the risk of a decline is quite high and that the odds favor the bears. During these negative environments, we will hold short positions in the stock market via inverse ETFs, such as the SH, SDS, or SPXU. So to review, when the environment model is positive, we'll be long the stock market via index ETFs. When it's neutral, we'll use our short-term trend-following system, and then when it's negative, we will hold short positions. Okay, enough of this chit-chat. Let's talk about the performance. Here's the result of the live returns of the Daily Decision Service from its inception in 2009. As you can see, we've got the main model, the hybrid model, and the aggressive model, as well as the S&P 500 on the chart. You can see that in 2009 we had a pretty good year. The S&P was up 23.45, whereas all three models outperformed. Same thing in 2010. Then in 2011 the system stumbled a bit as the market environment completely changed. Then in 2011, things are going along pretty well. I think the key to the performance is to take a look at the cumulative returns. From 2009, which is almost 4 years now, the main model is up 102%, which means money has doubled. The hybrid model is up to almost 300%. The aggressive model is up 251%, all versus the S&P 500 which shows a gain of about 51%. These are pretty good numbers. The main model doubled the S&P. The aggressive model beat the S&P by 5-1. The hybrid model beat it by nearly 6-1. But we knew we could and needed to do better. So in April 2012, we upgraded our system to the new adaptive daily decision system. So let's look at the test results for this new adaptive daily decision system. First of all, understand that no backtest is ever perfect. Far from it. However, a test of a system does tell us several things. It tells us what to expect during bull markets, what we might be able to expect during bear markets, and what to expect during those what I call iffy or in-between markets. So let's get to the results. The new adaptive daily decision service, or the test of the system, is shown on this page. As you can see, we've got the main model, the hybrid model, the aggressive model, the S&P 500. The key areas we wanted to look at were the bull market from 1997 through 1999, where the S&P was up 31, 27, and 20%. The main model, which is a good indication of the system since it does not use leverage, was up 13, which is a year of underperformance, 53.9, which doubled the S&P, and then 39.5, which again doubled the S&P 500. So overall, during the 1997 through 1999 bull market, I'm going to give the system a B+. However, the next big test, and something that's probably most important to investors these days, is how does the system work during bear markets? You can see that in 2000, the S&P lost 10, and in 2001, 13, then 2002, 23.37%. All three of the models were up during those years as they would capitalize on the down moves with gains of 28, 26, and 24%. So during this prolonged bear market, I'm going to give the system an A+. During the in-between years of 2003 through 2005, I think the system plugged along and did a pretty good job overall. Then in 2008, we got the big shellacking of a loss of 38.5, and then you can see that all three models did exceptionally well. The overall goal isn't the overall point of this isn't necessarily the returns, which I think are quite good. However, the key is the system does put the odds of producing a positive return as well as outperforming the market each year in our favor. So, what's not to like, right? You have to understand that nothing is easy in this business. Absolutely nothing. And this system is no different. It will be hard to stay with a mechanical system at times, I guarantee it. The key, though, is to understand the strengths and weaknesses of an approach. Please understand that we will not get the tops and bottoms of market moves. We also have to understand that gains happen in the stock market suddenly and without warning. You just never know when the move for the year is going to occur, so you got to stick with the system. It's very important to understand that we do not have a crystal ball and we cannot predict the news, such as the outcome of elections or whether Greece will stay in the Eurozone or any other big thing that happens to be impacting the market at any given time. It's also vital to understand that we absolutely will make bad trades during a year, probably several times during a year, especially when markets are neutral. We will, as a result, look kind of dumb at times, especially when the market is range-bound or a trend is changing. But we will also get the majority of the big moves right. So the key is to stick with the program for a period of 2 to 3 years, and I'm very sorry, but yes, I said years, not weeks or months. You simply cannot tell how a system is going to function for you over a period of weeks or months. For more information on how the system works, I realize we've gone through things pretty fast. We've written an extensive special report entitled The New Adaptive Daily Decision System. You can get to that on the Daily Decision homepage, and there's a link for it. Finally, know that stateofthemarkets.com was designed to help investors. Contact us if we can help you with your subscription in any way by using the Contact tab at the top of any of our website pages. And thank you in advance for your support. We look forward to a long and profitable relationship. Finally, thank you for spending a few minutes with me today to explore the daily decision, and I'd like to wish all of you the very best in your investment endeavors.